In this video you will learn how to scale in or trade multiple time frames using the wealth crossover indicator in order to get some very profitable risk reward trades. As you're probably aware, most traders are aiming for a 2-to-1 risk reward on a good day and occasionally perhaps a 3 or 4-to-1 risk reward. By leveraging the power of the wealth crossover indicator, we will be looking at trades which are more in the region of 5-to-1, 10-to-1 and in some cases upwards of 10-to-1. We do understand that this is a very bold statement, but as you will soon see, the wealth crossover is a very powerful indicator, and when used correctly it is more than capable of consistently producing these kind of opportunities. So how do we achieve this? Let's take a look at a recent example to explain how this is done. Here we are looking at the chart for the EURUSD on the daily time frame. As you can see, the three lines of the wealth crossover are loaded onto the chart already, and in this video we will be focusing on the blue line and the purple line. Let's take a closer look at this recent swing shown here, which unfolded in mid-December. As you can see, this was the high point between these two crossovers shown here, and when we put the midpoint on the crossover shown here, we see that this area shown here was the estimate of the turn on the daily time frame. Just for the record, we call these straight lines waves, and the crossover point shown here is the center of the wave. Okay, so now we've marked this area, we can now remove this line as it's no longer needed. And just to clarify, the highlighted area shown here is our estimate of the turn on the daily time frame. Next, let's draw another line to show the next wave which unfolded on this particular symbol. Now this area here is quite a decent estimate of the turn, and many traders would be more than happy to trade here on the daily time frame with an entry in this area shown here and a conservative stop loss shown here below the wave and a take profit in this region here at the other end of the next wave. Here we would be looking at a stop loss of approximately 200 pips, so this would therefore be approximately a 3 or 4-to-1 trade. But we can make a vast improvement on this by scaling in or drilling down into the lower time frames. Let's now open a second chart with the same symbol, the EURUSD, but on this chart we're going to be putting on the 4-hour time frame, and once again we will be putting on the wealth crossover and removing the other two indicators. Now let's scroll back through time and highlight the area as indicated on the daily time frame, which happened on December the 14th. This is where the power of the wealth crossover really comes into play. Here we're going to exploit the fact that the wave structure of the market is nested down on the lower time frames. So the waves on the daily are composed of smaller waves on the 4-hourly charts, which are composed of smaller waves on the 1-hour charts, and so on and so forth. In simple terms, the wealth crossover works on all time frames, but we use the higher time frame, in this case the daily, in order to forecast the beginning of a major swing in the market, and then we drop down into the lower time frame, in this case the 4-hour, in order to leverage the power of the wealth crossover and achieve a much tighter stop loss. Some of you may know this concept as time frame correlation or time frame agreement. So we already know that the daily time frame is expected to turn in this region here, and here is the same area on the 4-hourly charts. So if we take a closer look at the 4-hour charts, we see we have a crossover here and a crossover here, and again we will be focusing on the blue line and the purple line. So the highest point in the market between these two crossovers happened here, so we simply draw a line from this point shown here, and again we drop the center point on the crossover, which gives us an estimate about here. Hopefully you can all see now that we're just simply repeating the same process that we carried out on the daily time frame and doing it here on the 4-hourly time frame. That is all. As you can see, our estimate of where our entry would be on the 4-hour chart is this area shown here. Now in some cases the wealth crossover will occasionally pinpoint the exact turning point with phenomenal accuracy, literally showing the actual bar where the market turns on the lower time frame. However, we don't want to cherry pick the charts in hindsight. Honestly speaking, this is a below average example of the wealth crossover in action, so let's keep things realistic and see how it performed in this example. Let's be extra conservative here and assume that we enter the market here once price has clearly started to turn to the upside. And let's assume that we place a very conservative stop loss way down here below the wave just to be on the very safe side. So here we're looking at a stop loss of approximately 90 to 95 pips. Now if we go back to the daily, we're looking at a conservative target in this region here, which is approximately 800 pips away from the entry or something of that order. So we're looking at a minimum of about an 8 or 9 to 1 risk reward on this trade alone. And as you can see, this is using very conservative stop loss parameters. So the secret to achieving really powerful and high return to risk trades is found in exploiting the wave structure of the market on multiple time frames and really leveraging the inherent power of the wealth crossover indicator. Of course, it's not likely that you will squeeze every single pip out of each major swing in the market, but even if you exit the market in this region shown here, you're still looking at approximately a 5, 6 or 7 to 1 trade here on the 4-hour charts, as opposed to a 2 or 3 to 1 over here on the daily charts. Please note that you can still place your trade on the higher time frame, which in this case is the daily time frame, but we drill down into the lower time frames to pinpoint the optimum entry point and the optimum stop loss position. This way you will get a tighter stop loss and you will achieve a much larger profit potential. This is the way to make large profits and really leverage the power of the wealth crossover. In closing this video, we would just like to remind you all that effective and efficient trade management is always required, and it is vital to your success as a trader. Also, we completely understand that it's unrealistic to assume that we could enter and exit the markets at the perfect moment or on the perfect bar on every single trade. In reality, trading is not like this at all, and we are not saying or meaning to imply that you can get the most perfect entry and exit points on each trade. On the contrary, we are highlighting the fact that the optimum entry point is always found on the lower time frames, and the wealth crossover indicator is very helpful and very consistent at pinpointing exactly where this is most likely to occur. This has been an advanced video on the wealth crossover indicator by FoxEx.